am Susan Viston, and it is my pleasure to be here with Barbara Reinhard, Chief Investment Officer of Voya's Multi-Asset Strategies and Solutions team. Barbara, what do we need to know about how your team manages these portfolios and how you've been able to achieve success over the long haul?
Susan, it really comes down to putting our plan participants first. We have a 19-person team that works on investing these portfolios specifically for people that are planning for their retirement. We look at macroeconomic and business cycle data to make investment decisions. We also use a blend of active and passive management. We are always hunting for the best place to get risk-adjusted returns. Our goal is to help people plan and save for retirement.
So let's talk about how your approach turned into results, particularly in 2025, which was a surprising year with global equity markets returning double digits for the third year in a row. With that backdrop, how did your portfolios fare?
Our portfolios fared very well in 2025. We maintained our equity overweight over the entire course of 2025. We had a focus, of course, on the US, as we've had for many years now, but we took the opportunity over the course of last year to start to add some assets to the emerging markets, specifically countries like Brazil, India, and China, where the AI trade started to go global, and the relative weakness that you saw in the US dollar was a big beneficiary for those international markets. One other thing that helped us was we avoided real estate investment trusts over the course of this year, which lagged behind the broader equity markets.
Looking ahead for 2026, where do you see the greatest opportunities and risks for retirement plan participants?
That's a good question. We're optimistic that stocks will be able to outperform bonds for the fourth year in a row. And there's really three reasons that we see that, Susan. Number one, we've got strong earnings growth in the US and around the world. Fiscal and monetary policy are continuing to ease over the course of 2026. That's going to be a good support for the consumer. And our leading indicators of inflation tell us that it's going to continue to broadly fall over the course of 2026. There are risks that have to be managed in the portfolio, though. We know that stocks are expensive, so we have to look for areas of the market that have very good earnings growth associated with them. And we do think that the dollar is likely to be lower, which means that we're positioning our portfolio a bit more global than we have in previous years to take advantage of that currency translation back into the US.
So bottom line, for the participants watching this video today and looking at their 401k balance, what do you think is the most important thing for them to remember?
I want our plan participants to know that we have designed their portfolios to weather up and down markets. There's a lot of diversification in our portfolio, so we don't put all of our eggs in one basket. And also make sure that our plan participants know they have time on their side. When investing for retirement, there's a long horizon. Even if you're in the middle to even late part of your career, you want these assets to continue to grow and continue to outpace inflation. And that's just what your target date is designed to do.
Great. Thank you so much for sharing your insights with us today, Barbara.
Thank you, Susan.